The massive flooding in Houston, Texas is affecting markets and the futures world in the commodity sector. Joining us from the trading floor in Chicago is Alan Nuckman. He's Chief Market Strategist at Bullseye Options. Alan, great to see you here. There's not much doubt what the story is today. It's the huge situation in Houston. There's an enormous human toll. We've got to remember the human part of the story, but there's also a market side of the story as well. How much market impact are we seeing where you are from the flooding in Houston?
Well, the action in crude oil is actually rather muted. We're down about 50 cents, and that's after crude oil losing 60 cents last week. We're really just stuck in a range between $47 and $50. So in the big picture, it doesn't have as much of an impact as you might think. But if you look at gasoline, gasoline's had a big pop. Obviously, there's disruption expected. Houston is the center of the refining here in the United States. So that could play out for some time. We'll have to wait and see. But it's less of a reaction here coming in Monday morning than I might have expected.
Do you expect the lift in gasoline prices to persist?
It's going to depend. I mean, obviously, no one expects 50 inches of rain in one location, and this is, they'll come online as quickly as they can, but what it also does is it tamps down demand in that area. Houston is what I think the third or fourth largest city in America, so not a whole lot of people are going to be driving, obviously, in the next days and weeks. So while they can't refine and produce, there also won't be that demand component right now.
Can you talk about other commodities that may be affected? I've heard some comments that this could affect the cotton price or some of the lumber commodities.
That is interesting. There is somewhat of a fallout, depending on how much rebuilding is needed to be done. And you talked about, cotton and maybe some of the crops in the Texas area. So we'll have to see. But I'm always a big price guy, and I always look to see how the markets react. The markets usually know, and we're not seeing much reaction in other ancillary markets at this particular time. Maybe take a look at something like a Home Depot as far as a stock play, or look at some of the more look at some of the building supply type. If there's going to be a lot of rebuild that needs to be done, there might be a short-term play there. But the price shock potential is always there when you come into hurricane season, and it's important to see how it reacts, how it acts, and then how it reacts in the following days.
Do you expect any significant midterm effect on the share prices of energy companies that are active in the Houston area?
Yeah, that is a possibility. Again, it just depends. I mean, we're just a couple days in. It's gonna depend on how long this persists, and this is not going to be an easy cleanup. Obviously, they're talking about weeks and months for this to get back to a normal situation. Now, let's remember, Houston's been down this road in the last couple of years. They've had some big floodings here in 2015 and 2016. So. Unfortunately, they're getting more accustomed to this. Obviously, this is a very, very unique situation, but I think we've gotten through it so far pretty well.
We've touched on gold a few times just on the desk here this morning. We're taking another run at 1,300. Do you have any views whether we can get through it this time?
Well, I think so. I think we're going to pop up through. If you look at the euro currency is up here at two-year highs. The dollar index down here making some relative lows, and the Canadian dollar is holding above 80. So let's see what happens next. But I think it's really a currency play as we stand right now. The last couple of weeks we had this bout of volatility, but it wasn't really reflected in the gold price. So it's a little bit of a delay in its reaction. But I think a third try. This is the third try above 1,300. This looks like this one could stick. But to get back to volatility and the fear that we had in the markets over the last couple of weeks, the VIX has come right back down. We've had 3 consecutive weeks of lower highs, and we were down 20% last week in volatility. Back inside that band we've been trading in, mostly between $10 and $12 in that volatility index. So once again, we've had a VIX explosion, and then it's being beaten back down, and we're right back inside that lower trading range.
I know you've taken note of recent trends in the tech stocks as well. What are you seeing there?
Well, I'm looking at the markets in general, and the big three indexes last Tuesday, when we had that turnaround Tuesday, got right to the midpoint of this last sell-off that we've seen. So they bounced back and they got to the halfway mark. Now, if they can push above that, then we'll see another attack on those highs once again. Let's remember, it hasn't been that long since we made new all-time highs in the broad market of the S&P. So the market's not broken. We're taking a bit of a pause. And I was listening in the segment before I started. You know, it is about earnings. We're getting a bit of a relax here now that earnings season is over. It doesn't start again until October 13th. So we'll be able to focus on the fundamentals then. I think that'll be the next catalyst. But corporations are doing very, very well, obviously.
Alan, always good to talk to you. Thank you very much. That's Alan Nuckman.
Thank you, Paul.
Chief Market Strategist at Bullseye Options in Chicago. Up next,